Hey guys, welcome back. It's Sunday, June 20th, and after a break for a while, we're back making videos. This one's going to be short and sweet, and we're focused on one name, Zeta Global Holdings Corp, ticker ZETA. Currently trading at about 18, $19, and this is one that's getting a lot of buzz online. And we're just going to cover it really quick in about 10 minutes here. The reason why we love Zeta, if we look at it in our own analysis and screener tool that we built, you can see that it's currently rated undervalued according to 5 models that we're using here. You can check this out at purdyfinancials.com, but it's currently undervalued. It's currently around that $19 mark. Most analysis metrics show that it has strong upside, especially as it currently executes quarter to quarter, is growing in profitability, free cash flow, and net income's all getting stronger and stronger. Plus, more positive news just came out this week and more positive news to come. So we love the stock. We're holding it. We bought in early. We'll probably add some more. I'm looking at this one for my God, next 3 to 5 years. It could be a 5x, or honestly, it could be $100 stock. No one knows. Um, they just had a major partnership with Palantir, which is going to be a game changer. If we go to Nick Wealthmatica's X, you'll see that in more detail. Definitely check out Nick. He's absolutely killing it. But Zeta and Palantir had this incredible partnership just come out, and Stephen covered it on his latest podcast. Check out the Milkman too. But long story short, you have Palantir's operational data set now being paired with Zeta's consumer intelligence to help businesses become more of a intelligent business operation to help companies more than 7x their income. So it's going to be absolutely incredible. It's going to blow, I think, this industry wide open. This partnership is next level. It's literally insane. It's hard to even put together the data to show what the Palantir and Zeta effect's going to be long term, but they're both going to be working together to help businesses grow. Zeta helps Palantir, Palantir wins, and Zeta wins. Palantir helps Zeta, Zeta wins, and Palantir wins. It's a marriage made in heaven, and we're so excited to see what news comes as they officially partnered like a few days ago. There is more projects to come. There's more partnerships happening. It feels like they're just getting started. Again, Nick has got incredible posts here that cover it in more detail than I ever will. So definitely read those. I just want to try and help spotlight it and get more and more eyes on this company. Yeah, great detail here. Management targets 206 revenue 1.7 billion. They always sandbag stuff. Zeta has been beating expectations quarter over quarter for 17 or 18 quarters. So they're not slowing down. They know what they're doing. As you can see, next says in these assumptions, Zeta will book a 5.5% revenue beat from their mid-range and a 50% beat to their EPS guide. That's huge. And it could go even higher as well. Like this party's just getting started. So we love Zeta. We see it as a long-term major winner. Revenue 1.3 billion, revenue growth 30%, which is awesome. EPS is negative, but that's going to turn positive. Free cash flow 185 million. FCF margin 14%, gross margin 60%, and operating margin 0.4%. So across the board, it's the financials look healthy to me. They look really good. Yeah, there's a high expectation because it's high growth. People love it. We all love it. It's caught attention, but it's not parabolic yet, and that's why we love it very much. I see a lot of positive signs here on our revenue. Let's go back up here. Look at the fundamentals real quick. Company summary, I should say. It's a marketing company, Martech, and but they're rapidly evolving into more of a business intelligence software, and if you can call it software, kind of like a Palantir, really. But they help companies use internal private AI data sets to aggressively target the right customers with ads across all Omni platforms. So they're one of the best in class, and David Steinberg is a legendary CEO, killing it, and he has been doing incredible work for Zeta. When I look at the 1-year chart, we'll get to that in a minute, but it's right here in the middle of its 52-week range. Analyst is $28. Analysts are always wrong. By the end of the year, this thing could be $30, $35 if things go right. But it's on the right path. Financials are growing healthy ever since 2021. Revenue increasing, net income is increasing. Zeta has customers, almost half of, like, I think it's the S&P 500 use Zeta. A lot of the big companies use Zeta. More are going to be using them. Now with the Palantir partnership, expect more and more business. So this is what we love to see. Love to see growth, love to see strength. Look at this strong increase of just operating cash flow and free cash flow. Slight dip here, not worried about it. You will get, you know, quarter over quarter. You might see declines here and there. We all know that the end of last year into the start of this year was rough with the war, price of oil, businesses, AI. There's a lot of scares, but the fundamental business is totally intact, in my opinion. I see no problem. 3,000 employees, that's a good, healthy number, love that. Share float, 30 million. Short interest is 13. Keep an eye on that. Might see that go higher. We'll definitely be watching short interest. Shares outstanding, we've got 225 million. And then 50-day moving average is 19, 200-day moving average is 18. Book value 3.2. So very, very strong company. Here's your recent news. Let's see here. Yeah, this is all like Palantir could double next 12 months. Crazy, right? Partnership is positive, needing review. So you have a lot of news here from across the board. Palantir stock saying 70 right wipes out billions. That's fine. I actually bought the dip in Palantir. Love Palantir long term. Let's see, no notifications. Might be the one here. Yeah, data intelligence leader Palantir and AI-powered marketing company Zeta are forging a partnership to leverage their respective platforms, help businesses gain deeper customer insights and drive stronger marketing results. Why did Palantir not just buy them? Probably because Palantir doesn't want the messy side of like private data and customer data. They are not in that. They never want to be in that business. So partnering makes more sense. So no one knows, but that's probably why Palantir and Zeta are using ontology to create next generation marketing environment, giving Zeta all the advantages of AI while protected against many of the known dangers. So it's such a marriage made in heaven. We're so excited for this one. What did David Steinberg said? He said Palantir has built the infrastructure that the world's most sophisticated institutions run on, and Zeta has built the intelligence infrastructure that powers how enterprises acquire, grow, and retain customers. Together, we're bringing AI-powered marketing or business intelligence to those same organizations on a platform they already trust. So that's just phenomenal. It's like pouring gas on top of an already raging fire. So, man, we're excited for it. It's gonna be great. I want to keep this video relatively short, so let's just move on a wee bit quicker here. Back to the fundamentals. So when you're trying to evaluate Palant or Zeta, it's hard like to know which number to hone in on, because they're not totally um, positive yet. They're working on it. Forward P19, that's fine for me because again, P based upon future earnings, we can see the growth coming. I think it's reasonably priced. I'd like it to be lower, but it's not super high yet, in the high 20s or 30s, like a Palantir or Tesla or other absolute monster companies. So it's still early. That's what I see here, which is why I love it. Profitability, 60%. Awesome. Love that. And then return on assets, 1.5%. So they got a little debt, but their cash flow is great, so they should be fine. I'm not really worried about that, to be honest. This company is executing incredibly well. And you can see properly margins, gross margin up, operating margin, net margin, and EBITDA margin all remaining pretty around 0%. So this is what we love to see. And then it's more detailed information here we can look at for the next years to come. As you can see, notice the increase of gross margin, 60%, operating margin, they're all trending the right way, returns. I'd love to see this. Love to see this going positive. So yeah, they're executing phenomenally well. Debt to equity, debt to assets, all looks good too. Per share EPS is on the way to turn positive, and it's going to be huge. Yeah, I wouldn't be surprised if we see Zeta cross that $30 range. So here's the weekly view on the technicals. Fundamentals look strong. Now we're going to look at technicals real quick. First thing I noticed is what happened here back in 2024. They had a massive awkward lawsuit came out, which they eventually won. I'm not going to rehash those details, but that's what led to this collapse here. Otherwise, it was already $35 and it was executed incredibly well. But the wind, the air was sucked out of it, and it had this drop where it consolidated for, well, it still is consolidating, but it's for the path of that next year to like, well, November of 2025, right here. You can see it finally caught this win again. So it bottomed, put in the bottom here, the following spring, summer, and then it started to climb again back up, hitting those moving averages all along the way, which is great. And I would say since really this point, January of this year, when it had this nice big win, January this year was a nice crazy year for all companies went nuts. Then we had the Iran war kind of broke out and kind of sucked everything down quite a bit, apart from chips and semis. But you can see here decline down through the moving averages on the weekly, testing that 200-week moving average and then finally rebounding again. And now it's climbed back up again to test those moving averages, test prior highs right here. It got rejected at $25, which is kind of annoying on June 1st, but June typically is a bad month. I'm happy this year because it means I can buy more shares. I didn't think we'd get a chance to buy more shares down here before it re-rated higher, so I'll happily buy in this range here. Let's go a little bit closer though and see exactly where it finished on the technicals. There's the weekly low, $70, weekly high, 20, and it settled right here, that 1898 range right there, which I think is pretty healthy, to be honest. It's right in the middle of this past year, really, where it's kind of stock is being pulled to, I mean, the gravitational effect on stocks pulls it towards the mean. So you got that middle line roughly around here. But we want to see where it's going to go. When I look a little bit deeper on the MACD down here, you can sort of see it's converging around that middle line. It's poised to go one way or the other. It could dip down on really bad news, but I think it's getting poised to go higher and test this higher limit right here. Likewise on RSI and our own indicator here, at the very top, you can see that it's had a blue diamond, which typically just highlights growth, strength, and upward movement. So can be a buying indicator here. Obviously, if you bought here, you rode this gain from 15 all the way to like 22. Turns red here on June 15th, and that signaled a bit of a decline has happened, which is obvious right here. But now we're waiting to see what happens the next kind of few weeks. But what I would expect here in the weekly is we've just had this move down, so it might consolidate a little bit before going higher. Let's look at the daily though. We get more detail, of course, on the daily. We can see it in more detail on your indicators here, where it's come down quite a bit. I would expect a blue diamond, and then we go higher for a bunch of days, possibly into the weekly time frame. But the daily looks like it's pretty flushed right here. You've hit these bottoms, and it goes higher on the Williams Sonoma range right here. That's why we love that viewpoint there. If I go back to the weekly on the Williams Sonoma, hasn't quite come down yet, but you could see that formulate this next week or two as the data comes in. On the monthly, usually the best way to see macro trends, but it's not old enough to really get a full picture of moving averages on the monthly. But it looks pretty, as I would expect, pretty range bound in that $19, $18 range here on the monthly. But the daily is where you see a lot more movement. But what I also kind of see here is a bunch of red days for June, which a lot of companies have experienced, but I would not be surprised to see this move into strong days as we get close to that earnings call here. Here's the earnings coming up, August the 5th, estimate 0.19. on the earnings, and then estimate for revenues 420 million. But I think Zeta will crush that. Prior earnings here, you can see the estimate for earnings was 0.11, given 0.019. So not bad, pretty good right there. And then here you have estimate of 207, reported 3996. So it beat its revenue, which is fantastic. So we love to see. I realized I just read that wrong. Sorry, early morning for me, where it beat the earnings call here by 17%, 0.13 actually came in. So there's your Zeta overview. Again, check out Wealth Managa. Go deep on all of his content. He's killing it. So is Ronnie V. Those are my two Zeta quants. But this is one you want to buy and hold for a long time. They are growing phenomenally well. Here's the projection for the next few years on revenue per line item Palantir upside there. You can see it too coming in. Year-over-year growth up 20%. EPS year-over-year growth likewise increasing quite a bit. So we are pretty excited on the potential of Zeta. And there's your Palantir effect. Buy, 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 buy. So yeah, guys, check out Zeta. Keep it on your watch list. I recommend you buy the dips. Obviously not financial advice, do your own homework, but this is one stock you definitely want to keep a close eye on. Cheers. Have a good day.